interviews, one at 8, one at 9, that will both be posted today. So had to get this done early. And as I talked about, I think it was over the weekend, we're going to have to see how earnings play out to make sure this expansion, this run of the stock market continues. And today we had three banking stocks come out, three of the big boys, and two of them crushed it, and the third one, let's just say they're dealing with something. So, first up, J.P. Morgan comes out the box and crushes earnings. Just a couple of quick numbers. They did $2.57 a share versus an expectation of 2.35. What really got my attention and caused myself to ask questions again, based on what this channel is about, real estate, consumers, cost of capital, is their bond trading, right? Their bond trading revenue was up 86% to $3.4 billion. And as someone who experienced the nuttiness of bank, lending, of packaged of mortgages, I get nervous when I see that. And I wonder what's in that bond trading, right? Are they once again packaging up mortgages? Are they securitizing them? Ooh, that's a hard word to say. And is this just a sign that this engine that was the catalyst for the last real estate depression, right? Is that engine coming back to life? So it has me nervous. I'm always looking for the first early signs so I can prepare myself. And when I saw that, I got nervous, right? It could, again, people are chasing yield. This is what it's all about, right? Q4 was interesting. It's just I think we all, including JP Morgan, came to the idea that the Fed's not going to raise or lower in 2020. So again, yeah, that's something we're going to have to watch, right? And how we will see that is, does lending get easier, right? I am consistent. I don't know about consistently, but I do several mortgages a year, either purchase or refis, and I will be able to see if their lending standards change, right? If new programs come out, if it gets back to the nuttiness. I remember doing my first loan in '03, full on bank statements, balance sheet, all of it. And by the time I was doing my last purchase on my ninth house, literally they handed me a bunch of paper. The person helping me with it wasn't even paying attention. They were playing, who knows, you know, it was not good. So um, we're going to see if this is just a sign of some nuttiness to come. So we need to watch out. Um, I'm really curious how much of that 86% or 3.4 billion was mortgage debt, or that'll be interesting to see. Next up, Citigroup. Citigroup's number two that exceeded. Again, kind of piling on to what I read from J.P. Morgan, is their fixed income. Again, I see fixed income. I think bonds. Its trading was up 49%. So again, these two big boys are reporting, let's call them both, average together. What is that? 86.49. Let's call it 70% increase in mortgage or in fixed rate or bonds. So this has me nervous. And then the third, kind of the one that missed, is Wells Fargo. Wells Fargo, frankly, shrank by 50%. They're still dealing with their, I guess I'll call it an image crisis from what happened in these fake accounts way back in 2016. I think they're on like their third CEO or something. So again, I think they're the fourth largest bank by value. But again, Wells Fargo is trying to clean up its reputation. I look at Wells Fargo, and I could squint and look at what Boeing's probably going to be going through for the next 3 or 4 years. It's going to be a hard slog. The company still exists, still profitable. It's just hard. You got to watch morale. You got to watch defections of employees and the like. So I wish Wells Fargo nothing but luck to get through it. Obviously, what they did was wrong. They have been fined significantly. I think they just reported a $1.5 billion reserve for more legal expenses, and this is nearly 4 years later, so they're still paying the price. So again, J.P. Morgan beat, Citigroup beat. Both had record fourth quarter fixed rate or bond trading slash revenue. And again, for this channel, that has me a little concerned because I'm trying to figure out how much of that was mortgage related. Because again, I still have the scars, the memory of kind of how the last crisis started and how it built on itself time after time after time, and ultimately leading to just horrible lending standards that ultimately blew up. So next up, we have Larry Fink, um, and he was talking about his company BlackRock, um, Blackstone, BlackRock, I think, um, BlackRock, $7 trillion under management. So someone you should know, right? That's $7 trillion under management. He's talking about the climate crisis being something that's going to come to the forefront on the finance side, meaning that we are going to very quickly see a reallocation of capital. If you read his article, it was actually kind of interesting because what he was pointing out is often the first indicator of an upcoming crisis or fundamental economic change is the allocation of capital, because the allocation of capital drives the investment early that will tackle large problems. He talked about the .com craze and ultimate bust, and he talked about the climate being one of those things that could be going for decades, and it won't be like the .com bust where in the beginning you just slapped a .com on something, you tracked eyeballs, not revenue. But he says the climate crisis, and he talked about Australia, the brush fires, he talked about hurricanes, all those kinds of things that are seemingly intensifying, and indicated this is going to be a significant issue. And I guess he's going to the Davos Economic Forum or some big shot thing, and expects that to be a pretty big topic. So interesting. Again, $7 trillion under management. He's been in the game a while, so it will be interesting to see kind of what companies, I'm guessing, kind of try to tackle this crisis. And yeah, it's going to be something to watch. I had not looked at that in detail. I see the headlines just like all of you, and the 500 million animals that have been lost in Australia or expected to be lost. It's just tragic. So, climate crisis is on the mind of Larry Fink. Nope, Tesla, just getting there right now. So Tesla, Trent, is I'm sure you've seen it if you follow Tesla. It's up 108% in the last 3 months. Broke 500 yesterday. What is today? Today's Tuesday. Yesterday, and almost at 550 today. Kind of all positive news. Had the great Q4 delivery schedule, opened up the China factory, and kind of all green lights. The one thing, one kind of thing to watch out for is anytime you see most anything, right? In this case, Tesla is the most valued car company ever, ever. And yes, that certainly could go on further. They are game changing. They don't, clearly do not produce the most vehicles. The fact that they are more valued than GM and Ford together, at least based on an article I read yesterday, is interesting. But again, all signs are the positive. 108% growth in 3 months. If you've owned that stock, you're feeling high. Um, you know, Back in the day, what something I would do is sell half my position to get all my money back and let the other half run, right? But I don't own stocks. Don't listen to me about stocks. But that is interesting, right? Anytime you look at something that's the most valuable X, you know, you have to really ask yourself, how much of this is left to run, right? The stock market's been around a while, car manufacturers been around a while, so it's just something to watch out for. But again, I think opening that factory in China is a big deal. I think that's going to ramp up quickly. I think they continually stay in the headlines, um, but also, eventually. Well, I don't know about eventually. Eventually is the wrong word. There is a risk that this hyper value in their stock is just a big balloon, and it's just going to take one hiccup or one pinprick, and you could lose $100 quickly in stock value. So just be careful. It's getting to that kind of valuation where things continually have to be good news, if not great news, because eventually what will happen with a stock like this is good news won't be good enough, right? Let's just say, for example, they plan to deliver 3,000 vehicles, right? And they deliver 3,087, right? So they exceed. But the whisper number is 3,400, and then they miss, right? They miss the whisper, right? If you've not been trading long enough, um, are you ever read chat? I don't know what that means, but I read that little pop up, whatever that is. So in the end, just be careful, right? Eventually, a stock gets to the whisper number, right? There's the official kind of Wall Street, then there's the whisper number. I remember that being a big deal a decade or two ago. So just be careful. So that's for Tesla, and then of course the trade deal. This gets signed tomorrow. Um, Thank you. You're welcome, Trent. I'm glad you like them. Um, Finally, I got. Oh, look at this! All these chats. Hi, how you guys doing? Yeah, yeah, exactly. It's those are the things I watch out for, right? When Ford and GM really release their electric vehicles. I heard Ford is bought a Super Bowl ad for their Mustang Mach something, Mach X. I don't know what they're calling it, Mach something. Their Ford Mustang electric. So that'll be interesting. It's a good time for electric vehicles, right? We are seeing a fundamental change, in Tesla slash Elon Musk gets all the benefits. We wouldn't be talking about electric vehicles if we were still doing those ugly designs of 10 or 15 years ago. So good for him. Yep, Ford's building a plant in Michigan. Absolutely. Are you really? I don't know what that means. Some of these comment bubbles are just funny. In the end, so let's go back to the trade deal. This is actually a big deal for the global economy. It gets signed tomorrow. It's supposed to be Wednesday. Uh, we are starting to see what's in it. Um, it's We're going to see a dramatic increase in food purchases up to $50 billion. There's a total of 200 billion in commitments from China. China is going to be buying 200 commitments of goods from the U.S. Most of that being food and manufacturing items. So we could see a kind of a revamping of our manufacturing engine, which has really been the lag in our economy, right? If you go back, the last 100 days of this daily videos, you can see we've been talking about manufacturing kind of limping along. I remember manufacturing being below 50 on the ISM, right? 47 if memory serves. So this could be good. This could reinvigorate growth. So they're going to be buying a lot more stuff. They're also going to end the practice of forced technology transfers. This is basically something that how you doing? Something that they have always required companies that come in to transfer the technology to Chinese-based companies. So you got to be careful with that. That is something that's been huge on our end. We've wanted for a long time. So this is going to be interesting. The other thing I thought was really interesting is there is a lines in the agreement about how to put tariffs back in place, right? Basically, there are monitoring, right? So if China doesn't hold up their end of the bargain, there are penalties written into the agreement. I thought that was pretty cool and very strategic. So that is something that I'm going to be interested in following. So uh, it'll be interesting to see what really comes out. I think we're just getting tidbits today, but those are going to be very interesting. So, again, wrapping up this daily millionaire news, JP Morgan, Citigroup, crush it. We are going to see what is in that. Um, Makes me look poor. All right, well, that's okay. I don't mind looking poor. Uh, I don't. That's funny. My hat makes me look poor. That's interesting. So in the end, that's so funny. J.P. Morgan and Citigroup crush earnings. Wells Fargo falls short. No, I'm not bald. Climate crisis and Larry Fink and $7 trillion. I'm just going to go to the gym after this is over and lose some more weight. And this is a Warriors hat for my season tickets. So if you're a season ticket holder, you know you're not poor. So there you go. Um, Capital markets are going to pull forward the climate change. Uh, Tesla's up 108%, which is really cool, nearing 550, most valuable car company ever. Um, Phase one trade deal gets signed tomorrow. Agreements on increased food, force technology. and again, a target of $200 billion. And I want to thank all of you for these interesting little chat bubbles. It's been a very fun morning interacting with you. I want to wish you all a great day. Uh, yes, they're having a very bad season. Thank you for reminding me of that fact. That's great. All right, guys, take care of yourself. Have a wonderful day. This has been so much fun.